Hello, this is Cryptolyze. I hope you are well. This Thursday, 16 November 2023, we meet today to talk about ETH, the crypto of Ethereum. So as usual, we're going to divide this video into two parts. A fundamental part, we are going to come back to what Ethereum is, its news, and also its place in the crypto ecosystem, because we have new narratives that are emerging. To arrive, and what is the place of Ethereum in relation to these narratives? Even if I think that I will make a video dedicated to that in one of the videos of the weekend, that prevents us from addressing this notion there today, and then we will go to the graphs to project ourselves in the short, medium, long term on purchase prices and sale prices. And it starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth €400, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. What is Ethereum? So Ethereum is a level 1 blockchain which aims to provide developers with tools to be able to build decentralized applications. So to go a little further as they define it, it's really like a supercomputer made available to everyone to be able to provide a digital economy, really create a digital economy. And it is the support of decentralized finance, of DeFi, which we talk about regularly, and the goal being to be able to have all the tools to build this fairer, more visible financial system. And they have built other tools, such as, for example, NFTs or soul-bound tokens. NFT being a piece of code which allows a digital object to be instantiated in a form of uniqueness. That is to say that there is a digital object which becomes unique. It's the end of CTRL-V. That's really what is in fact the strength of NFTs, and the soul-bound tokens are going to be in fact a digital object that I attribute to a person and which I can then withdraw if I wish. For example, it could be the case of a study certificate or elements like that, which could be interesting. So we actually have tools that are made available to build decentralized applications. And the latest one, I talked about it in my daily newspapers, which is the account abstraction, which is in fact a piece of code which allows you to directly program your account and therefore in the long term and hypothetically to be able to do without its phrase site, to be able to determine subscription or recurrent systems directly linked to your wallet, to your account, not even your wallet, to your truly Ethereum account. To go further, Ethereum is currently the standard for everything that is done, everything that is built on the blockchain. We have some innovations from other blockchain typologies, but above all, we have the notion of compatible EVM. EVM compatible is Ethereum Virtual Machine compatible. The virtual machine is where the Ethereum code runs, okay? It's the code, its solidity, which was invented for that, therefore which has a particular language and which mainly allows the execution of smart contracts, these intelligent contracts which precisely allow us to be able to build everything that we now knows. Decentralized finance and almost everything we know in use case on blockchain technologies. And it is Ethereum which invented this, and it is Ethereum which continues to develop. We must understand that like Bitcoin, which has completed its development and is in the ossification phase, that is to say it will not move or move very little. Next to us we have Ethereum, which is in full development, in which we have a certain number of phases which will arrive. The next will be a notion of scalability for the ZK rollup and for the L2 rollup, meaning the layers. On top of Ethereum, which wants to use Ethereum as a security base. If I have to represent this easily, Ethereum is the base. It is the foundation which is really buried in the ground to ensure security, in which we will not necessarily have many transactions, therefore very little scalability, and precisely behind it there are other protocols which are grafted on top, what we call L2, Layer 2, which will manage all the transactions and then put them in small packets and validate this small packet of transactions directly in Ethereum. Finally, this large package of transactions on Ethereum. These are what we call rollups, regardless of the technology they use. And these rollups need places to be able to validate that, and therefore precisely Ethereum in its next update will allow the management of this place to favor 1. Cost reduction, and 2. The advent of these layers too to offer scalability to Ethereum and the Ethereum ecosystem, because we can no longer speak of Ethereum only but of a total ecosystem, because we really have a whole plethora of layer 2 which are being built on it and which gives strength to Ethereum. Next to Ethereum, it is also a transition that was strong. It is the merge, which took place more than a year ago now, in which we went from proof of work to proof of stake, which entered quite a bit. 1. The transition from an asset that was in constant inflation to a token that now has a crypto, which now is between inflation and deflation, or even deflationary in the long term depending on the volume of transactions, which is rather very positive, and above all what made it possible to offer the notion of scalability and all the other modifications that will be made. So it is a real choice which was made at the level of Ethereum and which allows us to continue to develop structurally on Ethereum. Besides, there are a certain number of other things that happened, with here the Chapella update, which made it possible to withdraw Ethereum staked on Ethereum, because you have to understand that that happened. Not done alone, the transition was proposed, that it took a long time, and many people had staked, so made their ethers available for the test phase, and they were able to start being able to withdraw them. We see them here. All these yellow bars that we see here. These are the withdrawals. The light blue bars are the deposits. But we see that mainly we have more and more deposits. Although short-term, we see here a certain number of withdrawals which are in progress. Even if in the long term, we can clearly see that we still have a trend which is quite bullish. Here we still have a profit-taking, I think, of a certain number of people who had stacked, or in any case a form of allegiance which is rather classic compared to the technical level that we began to have. Besides, we are at 23%, we have gone back below 24%, we have come close to 24%. I think that we should soon reach 25 depending on the bull run that we will have. And even when we arrive in a bull run phase, it is very likely to stay between 20 and 25, or perhaps even 26, because people will take profits little by little. Currently, the average price of people who are stacked is $2,000 at the level of ethers, so inevitably when we reach fairly high prices, we will have people who will unstack to take profits, which is in same logical time. In terms of the decentralization of Ethereum, we see that at the level of the different protocols we still have Lido, which dominates, but we still have something which is much more varied, and we have alongside the DVTs. So DVT, I'm not going to talk too much about it now, but which allows you to have delegated validation without going through a single protocol. So it's something which would really allow you to have decentralization in terms of validation and proof of stake. So who's going to be one to watch? I think we're really on the right side of that. Besides, we are going to finish in the fundamental part. We are going to attack the technical part, a technical part which is at the same time ultra clean. Here we have a schematic, Eliotique Wave 1, Wave 2, Wave 3, 4, 5, Eliotist, which ended here in November 2021 before having the acquisition in ABC, which is rather classic, and an accumulation phase also quite simple. We have a wick-off distribution in BC, Arkansas, ST, and currently we are in the sign of weakness. Sign of weakness, which is which? An accumulation of breakoffs, and when you zoom in, it's really very clean. Here we have the SC link climax, which was carried out with Celsius. We have an AR, which was placed here. An ST, so the retest of the lower part structurally okay. We did not have an STB or spring. D agreed. We did not have any liquidity gain from SC, but it is not obligatory. And we have here a first phase of accumulation with a rupture of the AR, which was here the phase of April. And then we had the implementation of a classic retest and a valuation linked to the acceleration that we have known since October 2023. So we have a valuation of Ethereum, although this week is in being in between, and we have Ethereum underperforming compared to the rest of the market. That's for sure when we look at the graphs of Ethereum compared to BTC or Ethereum compared to total market 3, which represents all cryptos apart from BTC and Ethereum. We have a sub-performance of Ethereum, but which at the same time is logical for several reasons, is that the bar of $2,000 minus $2,100 is really very complicated, that Ethereum has already had two very strong valuations. First here, preparation of the merge D elsewhere, which is a very good example of buy the rumor, sell the news. There we really have this part which is really magnificent, and in which then we have a second acceleration at the start of the year in which we broke the 2,100 again and we worked again. All in all, we are in a rather classic range shape at the level of Ethereum. And we could even say that Ethereum did not make its own acceleration specific to BTC, so we did not have a real acceleration and bullish breakout. At the level of Ethereum, and it is one of the Assets which have currently underperformed and which could outperform if we manage to maintain this bullish acceleration on BTC on all cryptos. This implies that Ethereum remains in a price range for me, which is very interesting as long as we are below 2000 minus 2100. We are in an Ethereum which is recoverable and purchasable at a consistent price. Namely that we must take into consideration that yes, we can go back further down. We can go and retest the 1,500. We can go and retest, why not even much lower, the 1,250. But that nevertheless, we are here at a price which is interesting at the level of Ethereum. Namely that technically when we made this acceleration too, we noticed a break of structure. We retraced, or 618, and then we left again. So if ever we had a validation of the break of 1,150 and a consolidation therefore with behind a candle which closes weekly above, I think that we would have a very strong acceleration. And we would very, very quickly retest at least the 2005 or even potentially the 3000 quite quickly at the level of Ethereum. And we must keep in mind that we could have something that could be very aggressive, especially when we look at the perspective of evolution that Ethereum could have in relation to centralized finance and everything that is happening compared to Layer 2. Theoretically, what can we set as a long-term target? Obviously, long-term being the representation of the end of a bull run with behind a continuity of development of Ethereum, an advent of the ecosystem, the arrival of incentives, and new functionalities which are accepted by the ecosystem and which fit into a common narrative. At that point, we could aim for a target of 1.618 with an Ethereum in the region of $8,000, $9,000, or even Y. Not much higher, at break the bar of 10 if we ever really had a supercycle, in fact, which could be set up at the level of Ethereum. Because don't forget two things, that is that Ethereum has gone to proof of stake. So that implies that we have burning, the more Ethereum will be used, so the more we will have challenge, the more we will have a reduction of the max supply. Therefore, the more we will have a concentration of the generic value of Ethereum, and that Ethereum is currently considered as one of the safest assets in which if we wish to have a return of 3.354% with validation in proof of stake, without almost any risk, with just the risks linked to the blockchain itself, well, I mean, it is a return which is almost free, and we could represent it as a form of good to the American Treasury, except that it is the crypto treasure bond, it is this representation there. And we do not have anything else which in fact has this strength there, this market cap there, and behind. This yield there while being at the same time in an inflationary-deflationary compensation cycle. So we actually have a real strength, and I think that this cycle will give us the answer is yes or no. Ethereum going to have a great place in the world of cryptos? Or will it remain as an evolving actor that drives evolution but is not actually revolutionary? The answer will certainly be in this cycle. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy. And if you ever want me to elaborate more on this theory of Ethereum as the leader of the next cycles, do not hesitate to tell me in the comments. I will definitely make a video in one of the weekends in either Saturday or Sunday videos.